So I did promise that I'll make a video on arbitrage, so here it is. What is crypto arbitrage and how does it work? Strap yourselves in, guys. I don't want to teach this in a way that this is something that you guys need to do, but this is happening out there and I want you to think about the implications of this on other coins. So I really want to tell you the moral of the story by the end of this video, so please watch till the very end. If you haven't done so, make sure you go subscribe, like, share, all that kind of good stuff. Go check out my TikTok, it's golden, you'll love it. So let's get started right into it. Crypto arbitrage takes advantage of the fact that cryptocurrencies can be priced differently on different exchanges. You may have noticed that, so I'll give you an example right now. So here we have Bitcoin USDT on Binance. It's trading at $36,806, whereas Coinbase is $36,838. So there's clearly a bit of a price difference. I'm just going to refresh that one more time and we're going to see that it's $36,844. So there is a gap in between these two. So arbitrage is going to be making a profit based on this gap, and it happens instantly. Well, you'd want to make it happen instantly, but the thing is, these are very short-lived. So let's have a look. Arbitragers can trade between exchanges that perform triangular arbitrage on a single exchange. We're going to see what that means as well. Risks associated with arbitrage trading include slippage, price movement, and transfer fees. So there are other costs involved into it as well, and that needs to be taken into account. Tens of billions of dollars worth of cryptocurrency change hands in millions of trades, but unlike traditional stock exchanges, there are dozens of cryptocurrency exchanges, each displaying different prices for the same cryptocurrency. So we need to first understand why these different prices are happening, okay? For savvy traders and the ones that aren't adverse to a little risk, that opens up an opportunity to get in the edge over their compatriots, play these exchanges against each other. And this is part of the reason why the price gap only occurs for a short time, because these arbitrage opportunities then pushes the prices against each other, and therefore it balances out, forming a bit of an equilibrium. Arbitrage is a trading strategy in which an asset is purchased in one market, sold immediately on another market at a higher price, exploiting the price difference to turn a profit, as we've seen in the two examples that we just saw. So on Coinbase, Bitcoin might be priced at 10 grand, while Binance, it could be priced at 9,800. A trader could buy Bitcoin on Binance, transfer it to Coinbase, and sell the Bitcoin, profiting around that $200 profit. Speed is the name of the game. These gaps usually don't last very long. Profits can be immense if the arbitrager times the market correctly. And a good example of this is when Filecoin hit the exchange on October 2020. Exchanges listed the price at $30 for the first few hours, others at $200. So how's that for an arbitrage gain? So on exchanges, the game plays out in order books, so which contain buy and sell orders at different prices. For example, a trader could make a buy order to buy Bitcoin for 30 grand. The order will go on the order book. If another trader wants to sell one Bitcoin for 30 grand, then they would add a sell order to the book, therefore fulfilling a trade. The buy order is then taken off the book and it has them fulfilled. This is called a trade. So what are the different types of arbitrage opportunities available for you out there between exchanges? One method of crypto arbitrage is to buy cryptocurrency in one exchange and then transfer it to another exchange where the currency is sold at a higher price. There are a few problems with this method because spreads usually only exist for a matter of seconds, but transferring between exchanges can take minutes. So that's a problem. Transfer fees are another issue, as moving crypto from one exchange to another incurs a charge. So that kind of is crap. So one way that the arbitragers then get around this fee issue is to hold a currency on two different exchanges. A trader employing this method can then buy and sell on cryptocurrency immediately. So you're pushing a button at the same time on two separate exchanges. Here's how that might play out. A trader might have $30,000 in US pegged stablecoin on Binance and one Bitcoin on Coinbase. Then Bitcoin is valued at $30,200 on Coinbase, but only $30,000 on Binance. Then the trader would buy the Bitcoin using stablecoin on Binance and sell the Bitcoin on Coinbase. So they would neither gain or lose a Bitcoin. They would just, it'll be the same because you're basically buying the Bitcoin on Binance, selling the Bitcoin on Coinbase. They would then be making a $200 profit due to the spread between the two exchanges, obviously without considering the transaction fees. Triangular arbitrage is another interesting one. This method involves taking three different cryptocurrencies, trading the difference between them in one exchange. So there might be an opportunity in arbitrage existing between Bitcoin, Ethereum, and XRP. So a trader might take advantage of the arbitrage opportunities by selling their Bitcoin for Ethereum, then using that Ethereum to buy XRP before finishing by buying Bitcoin back with XRP. If their strategy made sense and if it actually did work out, then the trader will have more Bitcoin at the end when they started. Yeah, pretty crazy, right? So what does that mean for decentralized finance? Well, I did a video yesterday about Aave. Is that why would people want to borrow Bitcoin? And why would people want to borrow cryptocurrency? Because it will mean that for arbitrage, right, which is obviously going on in this market right now, people can make these gaps. So in that $200 gap that we saw an example of that gap, right? Or even in the gap that we're seeing right now with Bitcoin in Binance and obviously on Coinbase, and there's that gap there. That little gap that we see there, well, it's only little. So what you need to do is we need a lot more of this. Wow, that's a pretty big gap actually. We need a lot more of this so that we can make more money. So then what DeFi then allows you to be able to do is then for you to borrow money. So what's DeFi? DeFi means decentralized finance. So financial services as we know it in this world right now are your banks. In the banks, we can get loans, we can make deposits, we can make transfers, okay? DeFi in the space of lending is going to become huge, right? So Aave is a cryptocurrency, AAVE is a cryptocurrency where they specialize in lending. And why do people lend cryptocurrency? So that they can do stuff like this. And there is this as well as, doing leverage trades and obviously, increasing your gains and losses as well. Your day traders are the go-to, those kind of activity as well. But all of these activities are increasing at the moment and people are jumping in. So that's how Aave was really good in that they then skipped the whole process of peer-to-peer lending instead of opting for what amounts to pull-to-peer lending. So if you want to check out the video on Aave, go to my channel, check out the latest video here, XRP, NeFi, XCAT, and Aave. That video, in the later part of the video, you will see information on Aave and how lending works in Aave. So this DeFi space is gonna go nuts. So make sure you keep an eye on the DeFi space and the cryptocurrencies that are attached to it. We're gonna see a massive summer. So the moral of the story is that no, you might not be able to do this kind of arbitrage work yourself. But more importantly, as somebody who knows that this is going on at a more institutional level, at a more equipped level, then you understand the importance of lending. You understand the importance of expanding that ownership, that trade size, so that this arbitrage activity that they do becomes more and more profitable. So keeping that in mind, you need to be investing into DeFi platforms where it's going to be facilitating that. And that's how I structure my portfolio. That's the thought and the logic that I put behind how I decide to invest in a cryptocurrency or not. So I hope you found that helpful. Thank you so much for tuning in today. If you haven't done so, make sure you go like, subscribe, comment, go check out my TikTok. You're going to see a lot of good updated information there. Thank you so much for tuning in. I'll see you next time. Peace.